The world has been rattled by an epoch-making crisis, which has caused significant harm, shuttered businesses, put livelihoods at risk, and protectionist reactions have cast doubts about the future of globalization. As we start rebuilding, we need to seize this opportunity to build a better tomorrow, one which achieves a more balanced, fair, and ultimately a more sustainable world. Globalization has helped raise living standards around the world in recent decades, and will continue to be vital for the future. Finance will continue to play a central role in international business. Making sure capital is available when needed will be crucial in shaping the global post-COVID economic recovery. Investors will provide the funds required to help companies around the world stimulate growth and create jobs. They will also help bring about the transition of our economies to a more sustainable future. Luxembourg will play its part. Our unique expertise in international finance connects investors with projects. Our ecosystem, our toolbox of investment vehicles, and our stability offer an ideal platform for financial services to operate on a worldwide scale. Luxembourg contributes to building a better, stronger, more open, and more sustainable tomorrow.
Welcome to Building Bridges, bringing together financial industry experts from different horizons, sharing and discussing their insights.
Well, ladies and gentlemen, thank you for joining us today as we examine the close ties between South Korea and Europe in the financial services arena. Before we get started, I'd like to start with some framing for the event today. The EU and South Korea have long been very strong partners, and the level of commitment and innovation in this partnership is very high. The strategic framework that was signed between the EU and South Korea back in 2010 was the first of its kind between the EU and an Asian country, covering a wide variety of areas of cooperation across the political, trade and security dimensions. The free trade agreement between South Korea and the EU, which celebrated its 10th anniversary last year, was also trailblazing, being the first trade deal the EU had made with an Asian country at that stage, and the most comprehensive trade agreement made by the EU up to that point. The results of this can be really seen in action. Over the last decade, we've seen an impressive growth in bilateral trade of more than 50% between the two sides, reaching over 110 billion euros. Trade in goods grew by 46% between 2010 and 2020, almost twice the rate of trade between EU countries and between the EU and countries without an FTA with the EU. Bilateral trade in services, a topic which is perhaps of more interest to us here today, soared by 72.2% between 2011 and 2020, amounting to 18.6 billion euros in 2020. On a more national level, Luxembourg and South Korea are also celebrating a really important anniversary this year, as 2022 marks 60 years of diplomatic ties between our two countries. And so we're delighted to have this opportunity today to work and in the future to work further together on developing the connections and linkages between Luxembourg and South Korea. Today's event will focus primarily on financial services and the areas of cooperation here between Luxembourg and South Korea, or the EU and South Korea, are manifold. In the asset management sphere, for instance, as investors start looking beyond their borders and start to diversify geographically, the regional experience found in South Korea can be of great value. And this international investment can also be an excellent source of capital for innovative projects, both in South Korea and across the Asian region, which will act to further strengthen existing ties. Moreover, as we know, climate change is a global problem, and here again, South Korea and the EU are strong partners. Going back to the EU-South Korea FTA, that was the first FTA the EU ever signed with a dedicated sustainability chapter. And we should build on this basis in the field of ESG finance as part of the solution to tackling the global challenges we face in this area. Moving on to financial innovation and fintech, there are also many areas for potential synergy. In the field of cryptocurrency, for example, South Korea has been very innovative in creating an AML and regulatory framework for crypto exchanges. And working together here in the context of incoming regulation in the EU and to also a certain extent in the US will be really important as crypto matures as an asset class. So with that, I suggest we get this show on the road. I'm first delighted to welcome Mr. Seoungho Jin to deliver a keynote to kick off our discussions today. Mr. Jin has been Chief Executive Officer and Chairman of the Board of the Korea Investment Corporation since May 2021. And he was appointed as Korea's Ambassador for Financial Cooperation earlier this year. As such, he's perfectly placed to provide context both of the financial services situation in Korea and also its relations with the European Union. Mr. Jin is an economist with more than 30 years' experience in the Korean government, mostly at the Ministry of Economy and Finance. And he served in many important positions there, including as Director General for International Economic Affairs and Director General of International Financial Cooperation. And he was also previously Director of the Strategy and Finance Committee of the National Assembly of Korea. Mr. Jin, the floor is yours.
Thank you, Chris. It's an honor and a pleasure to speak with you. I'd like to start by thanking Luxembourg for Finance for this opportunity to discuss the economies of Korea and the EU, the developments in our financial markets, and how we can work together. The fact that 2022 marks the 60th anniversary of diplomatic relations between Luxembourg and Korea makes today extra meaningful. To give you a brief introduction to KIC, we are the Sovereign Wealth Fund of Korea. We manage Korea's national wealth with total assets of $205 billion as of the end of last year. We consistently achieve good returns through long-term, agile, and flexible investments. And we strive always to be a trusted partner, not only for Korea, but also for global investors. This is partly why we opened an office in London in 2011 to invest more efficiently in the European market, which occupies an important position in the global financial market, and to strengthen partnerships with European investors. Today, we face a global economy in transition. The biggest questions we have to do with economic growth, inflation, innovation, and the impact of the war in Ukraine. Some economies will certainly contract, including those in the Eurozone, and increased market volatility will have consequences in the short term. As high levels of inflation weaken consumption and reduce corporate earnings, we'll likely see economic difficulties across the Eurozone. But even in such a landscape, new opportunities and possibilities will arise, and we at KIC are exploring them. Post-COVID, disruptive innovations have been sweeping across sectors, whether it's with the acceleration of a green economy, our virtual way of life, or growth in the healthcare industry. In line with this, KIC is diversifying its portfolio and strengthening its investment capabilities through strategies involving artificial intelligence and big data, namely through strategies that align with social structural changes like technological innovations and changes in consumer trends. In this time of global economic transition, I'd say Luxembourg is the best prepared. A financial center of Europe, it is home to many global players in the e-commerce and payment sector. The country has also been nurturing new industries with its low market entry barriers, advanced infrastructure, and easy policies for establishing startups. In fact, Luxembourg has the most startup-related government agencies, accelerators, and incubators in Europe. It is also an optimal business environment for global companies, especially in terms of location. At the heart of continental Europe, Luxembourg offers easy access to neighboring markets like Germany and France. It is a strategic port of call for the Eurozone. And it's no wonder global companies, including Amazon, AOL, and Microsoft, have their European headquarters there. Korea values the growth potential of Luxembourg, and it is my hope that we can strengthen our cooperative relationship with both Luxembourg and Europe. Of course, no discussion would be complete without mention of sustainability, in which Luxembourg is also a leader. In a shifting global economy, one of the biggest changes is the transition to a green economy. Countries around the world are preparing to respond to climate change, and major EU countries are taking the lead, including Luxembourg. The country's finance industry is a global hub for sustainable and impact investing. It has integrated sustainability into its business models. It is a pioneer of sustainable finance, and it has the world's largest market share of listed green bonds. In short, Luxembourg's financial institutions, supported by government policy, aim to transform their finance industry into an ESG center of excellence in Europe. I'm happy to report that KIC has made strides in this regard as well. As Korea's representative sovereign wealth fund, we have established a responsible investment policy that aligns with global standards. We are early to implement stewardship principles, and we are 100% ESG integrated across asset classes and processes. Through considering non-financial factors, including the environment, society, and governance in our asset management, we have achieved stable and sustainable growth in returns. We also communicate actively about responsible investing with domestic and foreign partners and peers. Going forward, we will actively respond to issues related to climate change, partner more with European ESG leaders, and strive to become a role model for responsible investment. I think the question we are all wondering now is, how should we prepare for increased volatility and the transition to new markets in a rapidly changing global economy? Well, there are many answers, but I think turbulent times call for stronger partnerships. First, the finance industry has the inherent advantage of creating jobs, both in and of itself and through providing venture capital. Collaborations between investors and companies can only help create more opportunities. So whether it's through creating jobs or being environmentally conscious, I believe that transparent and mutual cooperation can help us better protect the value of our assets while helping solve the world's problems. Also, two heads are better than one, especially in times of crises. Partnerships based on trust can help us navigate through economic transition and volatility, come out all the wiser, and find promising investments. So, as Korea's ambassador for financial cooperation, I will do my utmost to meet and communicate more often with investors and financiers in Luxembourg, as well as across Europe. With that, I'd like to leave you with Korea's aim to grow Seoul as a financial hub of Asia. In this regard, Luxembourg has served as a great example of financial center policies. As I mentioned earlier, Luxembourg has long been the financial hub of the Eurozone, with a strategy focusing on a differentiated competitive advantage. More broadly, Luxembourg is also a rising financial business and tourism hub globally. I believe there are a couple main reasons for this: continued regulatory reform and a transparent investment environment driven by the Luxembourg government, including Luxembourg for Finance. To share with you some of Korea's strengths, we have a proactive, dynamic spirit, and we are innovative. You've probably heard of K-pop, K-food, K-beauty, and other popular Korean brands. Young folks and investors around the world are showing great interest in the domestic market. More traditionally, we are proud of our manufacturing competitiveness, our abundant liquidity, and our strong and resilient economy. On the basis of all this, the Korean government is working to make it easy for global financial institutions to enter the country and succeed doing business. Simply put, Korea has a lot of potential. And I believe that if we are to all work together, Korea, Luxembourg, and the Eurozone, we could create new opportunities. Today's conference is a good step toward this, and to developing a stronger partnership between the financial hubs of Luxembourg and Seoul. Thank you.
Well, thank you very much, Mr. Jin, for that very wide-ranging keynote covering macroeconomic volatility, sustainable finance, and financial innovation. Well, I'm now delighted to be joined by Mr. Jin Choi, who is Managing Director of Genii Capital Korea, a global private equity, real estate and venture capital investment house. And together with him, I'll be discussing trends in this field. So, Mr. Choi, thank you for joining us today.
Thank you for inviting me.
Just to first provide a bit of context, Genii Capital is obviously headquartered in Luxembourg, but has a very long history also in South Korea. Perhaps you could talk us through some of the history. How did this come about, and what particular advantages does this kind of setup bring to Genii Group?
Certainly. I have been working with Genii Capital Korea since 2005. We originally started in Korea as a joint venture with my partner Eric Lux in Luxembourg, who is a very active investor both in real estate, private equity, venture capital, and is very active within Luxembourg itself, being born and bred. So we started in Asia with a Korean office, and we have been here since that time. It's been 17 years now. We do different kinds of private equity. Our main focus over the last few years has been mostly in real estate, particularly with Korean institutional investors going abroad, buying trophy office buildings, mostly in Europe and in North America.
Okay, that's very interesting. And I mean, the topic of this discussion today is really around dawn or dusk for private equity. So it's a real question of how is this sector developing at the moment? And we're obviously in very interesting and complex macroeconomic times. And then we obviously have had the complexities of COVID in the last couple of years, and then now the Ukraine war. How do you see this affecting the sector from your perspective over in South Korea?
Well, I think it's twofold. One, COVID and the Ukraine war and all of that has been a hammer blow, I think, in terms of the investment market itself. But also, I think in conjunction with that, I mean, I believe that real estate and private equity goes in cycles. Let's say every decade or so, there has to be some kind of corrections. I mean, nothing can go straight up. I think in order for it to properly work as a functioning market, there should be ebbs and flows to the market. Unfortunately, because of the various pandemic and the war and whatnot, there's been a lot of very cheap liquidity into the markets, and that's just really prolonged the inevitable, I think, is what's been happening. I'm old enough to remember when interest rates were 8, 10, 12%, 14%. All this period of really low interest rates has really just what the effect of it has been that there's just been people going around trying to buy anything and everything, and it's had a real damper on what really needs to happen, which is to correct the market.
That's an interesting kind of perspective. So how do you think that this is a kind of like, do you think it will be a sort of a short-term correction problem, or do you think it's a much more drawn out rejigging of the market, shall we say?
Well, I think, first of all, let me answer that in two ways. I think the first part is, I've lived in Japan off and on for 7 years, and I'm old enough to remember, when deflation started in the late 80s. Interestingly, my first job out of college was in Japan, and I made a certain salary at that particular time on a government program. Maybe 3 years ago, I met a guy who's on the same government program, which is still going on today. And by chance, I asked him what his salary was, and literally 20-some years later, the salary was exactly the same, not a yen difference. And that's really where you see deflation at work. And so I think, number one, constantly just printing money is just delaying the inevitable, which actually, interestingly, is still going on in Japan. But number two, I think, if you constantly have just the market going up and up and up and up, it's just not sustainable by any ratio or any rationale in the markets.
Yeah, do you think maybe taking kind of like an international perspective, is there, does this kind of context potentially provide a, another boost to kind of overseas investment if the opportunities aren't necessarily in your home market? Or do you think this is a kind of global issue?
It's a global issue. I mean, I can tell you firsthand, in the last 6 months after COVID, we thought that the markets were finally coming back, and Korean investors, for example, who had only really looked domestically over during the time of the pandemic, they were more than ready to go abroad. Unfortunately, our interest rates have risen dramatically, both in the United States and in Europe, and so because of that, deals have literally crashed while we're doing the deal, simply because when the Feds keep raising the interest rates, and then our deals are no longer sustainable from an investment perspective. And so that's happened 3 times in the last 6 months on 3 different deals, just firsthand.
And then So looking at, like if you were to advise a South Korean investor, let's look at it in both sides. If you were to advise a South Korean investor, where would you advise them to deploy their cash at the moment, and vice versa from a European perspective? Like where do you see the opportunities, or is this just a really, hold on to your hats type moment for everybody?
Well, I think twofold. I think with South Korean investors, the problem is that asset management is all booked under really one major category, alternative investments. Yeah. And so the people who are managing alternative investments do anything from bonds and stocks all the way to real estate and infrastructure. That's a really, really wide perspective to look at. And so when you're looking at a perspective that wide, the challenge is that if you look at a bond versus if you look at everyone, I mean, they're different types of asset classes, and you really should look at them with a different eye. However, I think that Korean institutional investors look at it with a very similar eye on all the deals. And so everything is really regarded more or less as a bond, with the country risk, with the city risk, and then with the company risk, and so on and so forth. It's really a checklist. And so the challenge for us is going to be able to look at asset classes more from an individual difference, meaning they should be looking at infrastructure purely from an infrastructure perspective and real estate from a real estate perspective. And I think the cash on cash really needs to come down, because when interest rates go up, you cannot get the same type of cash on cash that you were looking for prior to interest rates increasing dramatically.
So it's really about increasing levels of sophistication across asset classes, rather than necessarily just treating them as all kind of more or less the same thing. Maybe just looking forwards. I mean, obviously, a topic today is also technology and fintech later on in this panel. What's your views also on maybe the surprising correlation this time between the decline in capital markets and then also on the crypto side?
So with fintech, I think what's interesting is Korea is one of, I think, the leading nations in the world in fintech. I think it's a very, very aggressive market. You can see with the younger generation today, everybody is, people used to go into Korean chaebols, which are Korean conglomerates like the Samsungs and the Hyundais, and the GSs of the world. But what's been happening is that, this sort of lifetime employment with a conglomerate is no longer possibly the goal for younger recently graduated people in Korea. I think a lot of them are rushing to fintech, and they're rushing to many different aspects within fintech itself. And Korea has a lot of their own unicorns. For the Korean market, Korea is possibly one of the most wired countries in the world. And it's incredible how everything from just your own house and how wired your own house is to payments to, I mean, anything, you name it. Korea is a fairly homogeneous country. It's a country where, for example, my own daughters, we went on holidays to the West, and they looked at a door and said, "Oh, a key, that's really unique." And because everything in Korea is keyboard, even your own apartment is keypad. And so they were just amazed that people open doors with keys, things like that. I mean, even the simplest things which you just take for granted, is in Korea just remarkable. And so I think the market is super dynamic. Everyone's 100% invested into technology. Fintech is everybody is all in Korea. So in terms of an investment market, it's a brilliant market to invest in terms of fintech.
And maybe just one last question. We're almost out of time, but obviously we have a certain amount of, so we say, European financial services professionals on the line today. So what would be your advice to them in terms of setting up in South Korea? What advice would you give to a European firm looking to establish its first presence in South Korea?
Well, I think a couple of things. Number one is Korea is a very rewarding but very challenging market. And by that, I mean, when we first decided to come to Korea, it was in 2005. And so rather setting up a Korean entity, we actually were a Luxembourg entity with an office in Korea. And that was sort of a qualitative and quantitative difference. And the reason we wanted to do it is because, asset management firms, for example, in Korea, there are over 250, maybe 300 asset management firms in Korea. They've just decreased the qualifications to open one, and so it just gets easier and easier to do so. And so it's a fierce domestic challenge. But if you're an international firm and you're looking for deals in Korea, or you're looking for investment monies into Korea, it really is worth it to open a small Korea satellite office, because what that does is it allows you to be here in the market, because you really do need to be with the investors on a constantly near daily basis. And so we're always at Genii Capital happy to help anybody coming into the markets. But I think that it is one of the keys is to be in the market itself.
Okay.
Rather than remote.
Mr. Choi, it's been an absolute pleasure having you with us today. We're unfortunately out of time, but thank you very much for joining us and sharing that really interesting perspective. Next up, we have Xavier Sourne, who's a partner of EHP, who will guide a small panel through more of the complexities and opportunities in the field of asset management internationalisation. So over to you, Xavier.
Thank you very much, Chris, for this, and thank you very much for the organization of this conference on building bridges with Korea. Investment funds have always been an effective tool to build bridges, and when talking about the subject of today on globalizing funds for global investors, investment funds have proven quite effective in this regard, both on a human and financial perspectives. They follow the globalization of the economies. They also suffer from any limits imposed onto it. The globalization of investment funds can be backdated to 1985 and the very first UCITS directive, nowadays worth more than $4.5 trillion in Luxembourg, being the first market and the first global actor active in the UCITS globalization. Globalization funds for global investors does not only mean large institutional investors, as we can see them in Korea, with a very large number of them being onboarded in various Luxembourg structures, but it also means retail investors, which makes sense for UCITS, but and worth mentioning with Alessandro later, for alternative investment funds that also benefit from a retail passport called LHoFT. Today with me, we have Mr. Hongrae, who is the Vice Chairman and former CEO of Korea Investment Management. And we have also Alessandro Silvestro, the Asia Pacific Managing Director of Lemanik, one of the largest third-party management company in Luxembourg, and Alessandro, like me, is based in Hong Kong. To start this panel, I would like to thank you very much, both of you, Mr. Choi and Mr. Silvestro, for accepting to discuss this topic with me today. But I wanted to ask you, Silvestro, to what extent we can talk today about the globalization of UCITS, Alessandro.
Thank you, Xavier, and good day to our audience. I would say the first point I want to make here is about the globalization of UCITS, and Luxembourg is the undisputed leader in global fund distribution, but also on AIF. In the last 15 years, Luxembourg has established itself as a prime location for alternative investment as well. So we can certainly talk about globalization of UCITS, But the industry of alternative investment funds is following very closely the same path of the UCITS. So we can also talk about globalization of AIF. Focusing back on UCITS, Luxembourg is the house of UCITS. We just heard the number, 4.6 trillion of assets under management are domiciled in Luxembourg, and these are all UCITS. So let's compare this with other global brands. So we know that Luxembourg funds are sold in 80 countries around the world. If we look at, for instance, the global fashion brand like Hermès, they are selling their stuff in 45 countries, Louis Vuitton in 50 countries, Versace in 60 countries, Zara in 96 countries. So we have a good usage compare well. Let's turn to furnitures. IKEA, big global brand, 59 countries. HSBC, 64 countries. Only McDonald's with 118 countries overtake the usage. So as a conclusion, Xavier, yes, we can say that UCITS are a global product. Yes, with 5.6 trillion AUM, Luxembourg fund industry is the second largest investment fund center in the world and number one in Europe. And yes, Luxembourg is the house of global UCITS. And I would add, it's on the path of becoming the house of global AIF.
Thank you very much, Alessandro, to put those things in perspective, especially with McDonald's, which probably is missing Russia at the moment. Mr. Shaw, KIM is a cross-border group. Not really sure whether you reach the 90 countries of distribution, but can you explain to us the recent evolution of KIM and how globalization fits into the business model?
Sure. It would be a great chance to introduce my company. Well, first of all, let me introduce the Korea Investment Management, which is a private but oldest asset management company in this country. We were established back in 1974, and current assets under management is over $43 billion at current foreign exchange rate. This amount is fifth or sixth in domestic league table, but the largest number among asset managers without any affiliation of insurance companies or big commercial banks, so-called. So we are the largest among the so-called stand-alone asset managers in Korea. We've been a leader in globalizing the Korea's asset management business during the past 10 to 15 years. We set up overseas offices in Ho Chi Minh City, Vietnam, and Shanghai, in China, before the financial crisis of 2008. We've been very successful in launching Vietnam equity fund and China fund, both equities, for the domestic retail market. But during and right after the crisis, we went through truly a hard time in terms of both fund returns and asset size, which is common to everybody at that time. These experiences, however, worked as a blessing in disguise effect when we came back from the bottom to revive the retail market for the overseas investment in Korea. And currently, the KIM's AUM, assets under management, is roughly $43 billion, and out of this, fund AUM is $26 billion. And out of that amount, again, 58% is private fund and 42% is public funds. The portion of overseas investment fund is around the 47% for both categories. So, and also because the management fee is higher for the overseas investment fund, we make more money out of our overseas investment opportunities than in the domestic opportunities. And we are a very highly recognized player in domestic market. We have business relations with all major institutional investors and major retail channels as well. Retail channels here include the channel of our sister company, Korea Investment and Securities, but the dependency on our captive market that company actually is below 35% during the past 10 years. And that is roughly what we are in domestic market.
Thank you very much. Thank you very much, Mr. Cho. Back to Alessandro, the globalization of investment funds and the Asian market. We've just heard Mr. Cho explaining how Kim was footprinted across Asia. Can you expand a bit on the globalization of investment funds and in particular in this region?
Sure. Interestingly, BlackRock founder and CEO said that we are ending this 3 decades of globalization. Why? Because of the pandemic, because of financial challenges, because of the fractious politics, because of global supply chain vulnerability, and as well, arguably, ESG standards will make long supply chain more difficult. To end that, the Ukraine war didn't help. So according to him, what will happen? It's more regionalization. Do I agree with that? And this will happen to UCITS? Probably not. And let's see why. We just saw that Luxembourg funds are sold in 80 countries around the world. Obviously, in Europe, you have the European passport. By simple notification, within 15 days, you can sell your fund all over to Europe. UCITS are also sold in Latin America, where we have a client in Chile continuously tell me that Chilean pension fund really love UCITS fund. Same is in Middle East. Moving to Asia, UCITS have been all over the place in Macau, Hong Kong, Singapore, and Taiwan. But now even Korea can be added in these markets because there are over 500 funds that are registered for distribution in Korea. This is massive. Other well-established countries are Australia, Brunei, and Japan. But Luxembourg ecosystem doesn't sleep on their laurel. ALFI, Luxembourg for Finance, continuously work to expand the UCITS reach. For instance, Vietnam, Malaysia, Indonesia, Thailand, Philippines. I recall, Xavier, we went there in February 2019 to promote the UCITS. And only Trump and Kim Jong-un, the North Korean leader, stole our headline and our show because they were there for the first time and made history. So these markets that I'm just talking about are the future because they are heavily populated market and they are clearly a big opportunity for UCITS funds. To summarize, I can certainly see the recent regionalization of happening, like Larry King said. And yeah, there are some threat to the UCITS product. Yes, sometimes a local product or regional initiative can make sense, but when you want to go global, UCITS is there to stay. Finally, some say that UCITS are overcomplicated. It's not an easy regulation, but company like yours or other company that are here in Asia for many years, investing it with offices, staff, expert, make it easier for clients to embrace and simplify the UCITS and the F regulation.
Thank you very much, Alessandro. Mr. Cho, since we're building bridges today with Korea, maybe you can describe how the Korean market is expecting asset managers to approach the market and whether there is appetite on the local investors for UCITS and maybe in general for offshore products.
Okay, thank you. Before answering to your question, I need to 2 points that I missed in describing our company's activities in Korea, which are related with the UCITS business. Number one is that we are the first, probably the first Korean asset managers who set up UCITS, more specifically CYBAVO, SICAV, a conduit domiciled in Luxembourg back in almost 10 years ago. And that conduit was for the Korean equities and Vietnamese equities. And obviously, by definition, that conduit was for the retail investors in Europe. And that's one thing. And the other thing is that we've sold huge amount of almost $1 billion US dollars amount of target date fund, which are aiming the pension market. And that target date fund is, by definition, is a fund of a funds style type. So those funds which were included in the target date fund, 80% of those funds are UCITS. So we do have already a pretty strong relationship with UCITS or CYBAVO Luxembourg domiciled funds already. And let me go back to your original question. Out of the Korea domiciled fund of 650 billion US dollars, the overseas fund is 1/3. That is the statistics. And the portion of overseas funds is 40% for the private or institutional investors, which is that number is a little bit harder than in the public market. But I think currently the 40% or something is that's it. I mean, for the institutional investors. But because we have a lower portion of overseas investment in public market, we expect the portion of overseas investment is going to fastly grow, specifically in that market segment in coming years. I dare to say that the Korea's domestic asset management market would look like a blue ocean from the angle of foreign asset managers in a relative sense. I mean, compared to other Asian countries like Japan or Australia, which are more or less saturated markets. I like to touch 2 points. That is the pace of growth of asset management market and the growing asset allocation towards the overseas investment opportunities. In both perspectives, I dare to say the Korean market is a blue ocean. I have 2 examples to verify my blue ocean story. One is National Pension Service, the national pension of Korea, which are 4th or 3rd largest around the world. They already have 725 billion US dollars assets, and it will be doubled by mid 2040s. So within next 20 years, it's going to be doubled. But anyway, currently their portion of overseas investment is 45%. And that number was 20% or something only 10 years ago. But their plan currently is that that number will be 55% by 2025, only 3 years away. And my wild guess is that that number will touch 60%. Because that number was the number in Japan many years ago. So the demographics and the investment appetite in this country is following Japan with a gap like 10 or 15 years. Okay. And also another example is the growth of our pension market, retirement pension market. Currently, the size of the pension market is more than $270 billion. And it's very fastly growing these days. And the hottest funds for those pension market investment, especially if they are defined contribution type, the hottest and most popular funds are typically investing their assets, more than 60% of their invested assets overseas. So those 2 examples can verify that my assessment that the Korea's domestic market is the relatively blue ocean, both in terms of growth of the size and the allocation towards the overseas investment opportunity.
Thank you very much, Mr. Shaw. Alessandro, we both mentioned the role of alternative investment funds in this globalization trend. And we've seen Luxembourg being one of the largest players in the very recent years in the setup and structuration of AIFs, which is a part, or which is playing its part towards the flow of funds across the countries to finance the real economy. What do you think are the main reasons for global managers to use Luxembourg AIFs since 2013? Because this is the date where we implemented the directive on AIF.
Yeah, thanks for the question, Xavier. I will start with, I would say, some statistics. I would say if we look at the AIF world, it has been growing as fast as usage, which is super fast. Putting numbers, the AIF today represent over 1 trillion when they were 0.3 in 2013. So it has been growing exponentially, and today we are already 1 trillion, and we can easily see an acceleration of growth in the next 2-3 years for many reasons. Why? Passporting in the Europe, and secondly, European investors want regulated alternative investment funds or want European structure, and we'll talk more about that in a minute. Also, they want investor protection, which Luxembourg structure can offer.
Talking about the structures, I think it's a key element of this presentation to explain what structures can be offered to Korean managers in order for them to set up alternative investment funds in Luxembourg. What do you see?
There are many different structures. I will just focus on 2, if you are okay, which are the most popular nowadays. I think we see RAIF and SLP. These are the 2 structures that most of the global investors use, and as well here in Asia. Let's see at the benefits of each structure first, and then we will touch base on the differences. The benefits is that both are very quick to launch. Basically, you just need to sign documents and that's it. You can launch a RAIF, I would say, in arguably 6 weeks, and a similar and even shorter time for an SLP.
Because it's not supervised.
Because it's not supervised, or to be clearer, RAIF are indirectly supervised, like your firm like to say, and why SLP are completely not supervised by the regulator. Correct. Thank you. Also, RAIF have a European passport, and SLP can benefit of them if they have if they appoint an AFM. Let's look now at the main differences. So we talked about the supervision and indirectly supervision of the CSSF for the RAIF and not for the SLP. Then RAIF is really a fund structure, while SLP we could not consider so. RAIF appoint a depository, a fund administrator, a TA, an AFM, an audit, a lawyer, while for an SLP, basically you need probably a lawyer and a fund administrator, that's enough. RAIF has diversification.
Enough, but very important.
Absolutely. RAIF have a 30% diversification rule. You don't have the same on SLP, which is much more flexible. A benefit of the RAIF is that they can be umbrella, which an SLP cannot. And RAIF can touch well-informed investors, while SLP can touch professional investors. SLP don't need to prepare an annual account, and because they don't need to appoint all the service provider we have meant are also cheaper. And they don't have legal personality. That's my short summary.
Very good. And how is Korea doing in all of this? Do you see SLPs being launched or used by Korean investors, or RAIF being launched or used by Korean asset managers?
Absolutely. So first of all, AIF in general have become more popular, especially in this low yield environment. So strategy like private debt, private equity, private credit are, getting traction. So if we look, for instance, at Korea life insurer, they are always investing to fixed income. That's really their backbone of the investment. However, if they want to make a more return, they're increasingly putting investment into private credit, private debt to enhance their portfolio return at the cost of liquidity. Now, if we look at the investor level, so what we see very large Korean investor that have big commitment. What did they do? They launch a tailor-made SLP, where they are alone in the structure, and this SLP become a feeder of Luxembourg AIF. So SLP can also be used as a structuring vehicle for Luxembourg AIF. Right. Moving to the GP, what do we see? We see Korean real estate managers having launched a RAIF, and increasingly Korean private equity are looking at RAIF as well to tap into EU investors and expand their investor base. Absolutely. Other Genii have done very well as well. For instance, Barings Private Equity, PAG, Goodman, ICBC, Silverhorn, they all launched Luxembourg vehicle to tap into European investors. And this is just the beginning, because we can expect more Korean managers, more Japanese, more Chinese private equity to launch AIF funds or SLP structure to emulate US counterpart like KKR, Blackstone, BlackRock, Apollo, etc., etc.
Thank you very much, Alessandro. One very last point, and please very quick, on the retailization of this market. We've seen a trend towards retail investors. How's that conceivable?
Sure. So I think, at the global level, we have seen this in the US, where US, which is a super regulated market, are looking to expand private equity investment to pension fund. Similarly, Europe is doing as well, where they expanded the so-called well-informed investor to qualified investors, informed investor, or semi-professional investors. LHoFT is paving really the way from that perspective, where retail will get access to real economy and actually also finance the green transition. LHoFT, which is the European long-term investment funds, are the only type of AIF that can be distributed on a cross-border basis to both professional and retail. The last European Council decided to remove the 10,000 euro minimum threshold, which is an important path on that direction, and to ensure relevant information disclosure to make informed decision. And another point, and last point I want to quickly make, is as well, still on the retail side, what are doing global investors? They are trying to tap into even though these are more ultra high net worth individual than pure retail, but they're trying to tap into the 1 million to 5 million disposable asset type of family and this segment represent 80 trillion according to Capgemini. So big private equity want to get investments from these ultra high net worth individual, and because right now the investment of this family are less than 5% into private equity. So we can expect, in the future, retail and ultra high net worth individual investing into private equity and LHoFT.
Thank you, Alessandro. Mr. Shaw, to come up with a conclusion, I would love to hear you on, because of your experience at KIM and also at the association in Korea, would like to hear you on how we could, both on the Luxembourg and the Korean side, improve and make the bridge between those two countries even stronger in the years to come. You're on mute, Mr. Shaw. You're on mute, Mr. Shaw.
Sorry. Yeah.
Yes.
Sure. I do have an idea, which I truly hope to be crystallized. I would suggest a setting up a joint venture, a new entity, new company. Joint venture between Korean companies and Luxembourg companies like renowned companies like Lemanik or whatever. And I suggest that new entity, new company, first sells its products to Korea's domestic market, retail market. And number two, to sell Korean products to European market. And at the same time, both products, European products and Korean products, to the Asian market, which are under the umbrella of Asia Region Fund Passport initiatives. So, well, you may ask why joint venture? Then my answer is like that. Well, by doing so, we can guarantee mutual benefits. I mean, the building a bridge between two countries must be kind of mutually beneficial, truly on a concrete business in a sense. And I think it must be also we must make use of the external environment, such as policies or other changes that are irrevocable. So Asia Fund Passport initiatives is something like irrevocable changing environment, which are very favorable to both countries. So the joint venture can guarantee mutual benefits, and also the Korean companies need to learn Luxembourg's experiences and know-hows for the past 3 decades, and also by setting up this kind of a joint venture in Korea. We can, the business itself could be very profitable, and at the same time, more important thing is that it is going to be the first step to penetrate into the Asian market. Mm-hmm. So the Korean market must be the first stepping stone towards the Asian market. That is my thought. And okay. And also I need to just touch the one point.
1 minute.
As you may understand, the Asian Fund Passport initiatives was already begun, but right after that, we experienced the COVID-19. So we are going to begin again. But currently, the global financial market is not in a good condition. So probably we have a little bit more time to really start the new businesses. And also, one other thing which is very important is that we have a new president and new government. So, their goal, the economic policy goal, is something like number one, to overcome the current, inflation or stagflation situation. But the basic goal is creating new jobs, which are decent, like office jobs. Well, financial industry can provide that kind of jobs. And also their goal is deregulation in many industries. So they are willing to provide a better environment for this kind of a new, business opportunities. That is my thought and my belief. Thank you.
Thank you very much, Mr. Cho. To conclude on the possibility to build bridges with Korea, I think we have a good recipe with a pace of growth and the blue ocean that Mr. Cho very well described on the identity of the Korean market. Mm-hmm. The size of the investment tickets we can, Alessandro and myself, witness quite often coming from Korean investors, the quality of the Luxembourg structures, and of course, as Mr. Cho just mentioned, the new Korean government. We believe that we have all the tools and the elements to make the bridge between the two countries even stronger than before. Thank you very much to both of you, and back to Chris. Thank you very much.
Thank you.
Everyone.
My pleasure.
Bye. Bye.
Thank you.
Bye.
Well, thank you, Xavier, Alessandro and Hongrae for that really interesting discussion around asset management internationalisation, some of the challenges and opportunities in that field, as well as, Korea as a blue ocean investment for foreign investors looking to expand their asset management business. Now turning to another topic, which is obviously attracting a lot of global attention at the moment, and that's obviously sustainable finance. And I'm delighted to be joined in the studio now by Anna Lindner, who is a lawyer and a senior associate at GSK Stockmann, focusing on capital markets, banking and finance, corporate restructuring and sustainable finance. It's a pleasure to have you in the studio today.
Thank you for having me.
So just to really jump into this topic, maybe, considering that this is focusing on building bridges with South Korea, it might be useful as a starting point to just explain how ESG as a regulatory topic is important. Like, it's been an important topic in Europe for some time now. Perhaps you can give us some of the kind of main thrusts of what the EU is doing in the regulatory space here.
Of course. I mean, we have seen a lot of regulation in the area of sustainable finance in Europe recently. So I would say if you can summarize the main efforts that the European Union has been making. So you would start with maybe the taxonomy, which is basically defining what is green according to the European Union. It's not the only taxonomy in the world. Then you would have a very big focus on disclosure over different market participants. You have disclosure rules for the financial sector, for products, funds. You have financial upcoming for corporates, even more, a bigger focus on the real economy. And it's just going through the bench. Basically, everybody is faced with disclosure rules in this area, always linked back to the definition of what is green, to the taxonomy. So the taxonomy is the heart of the matter. And then as a third pillar that maybe gets the least at the moment, it's a sort of incentive. So trying to spur more private capital into this effort of combating climate change. So you would, for example, have MiFID II, the suitability test, where banks are required to ask their clients, I think as of August, to give their preference on sustainability products, and then obviously have to offer these products. So this is the hope of bringing a lot of retail capital into this effort. So I would see these are the three main pillars, and we have seen a lot of regulation in a vast amount of detail.
Okay, so kind of a carrot and a stick approach to a certain extent. And this is also regulation with some teeth, isn't it? I mean, we saw a couple of months ago that the CEO of DWS had to resign over greenwashing. What should be the key takeaway for institutions here in that kind of context?
Yeah, as I've been saying for years, this is a topic that will not go away. This will be very, very important in the future in Europe. If you want to do business here, you have to deal with these rules. And yes, there's teeth behind. I think that particular case that you mentioned is also interesting. That was originated from a whistleblower. So we have seen also efforts to strengthen the whistleblowers in Europe, and you can see that there is a multi-effort to also with the focus on disclosure to bring more attention and more information into the public, and then not only count on the regulator to find the issues, but also to bring, private people working for firms or NGOs looking at the public data into the mix, and then the regulator, like in this case, follows maybe suit. Also interesting about that case was that it was not only a greenwashing issue, but also a governance issue. So,
yeah, that brings me quite nicely actually on to my next question, which was obviously the focus of lots of the regulation currently has been really around the environmental factor of ESG. But and obviously that makes sense considering the urgency of some of the problems associated with climate change. But maybe you could also talk about what else is being done in Europe on the more the S and the G factors of ESG.
Of course, I mean, I think the G has been handled always in the European Union. So the governance part, how a company should be governed, has always been important, obviously, to European Union legislation. So we have, for example, seen stricter rules for remuneration, executive remuneration, especially for banks, but also in the corporate sector following suit. There's also the link with ESG, for example, in executive remuneration, which brings these two topics together. Or we have also recently seen national board diversity initiatives, which of course is also very important. So I think we have come from a lot of governance. We're adding the environmental, the E, a lot more now at the moment. And for the S, I think at the moment it's maybe a bit hidden, but it is there. For example, in the EU taxonomy, there's this concept of applying minimum safeguards. So you cannot be green according to the EU taxonomy if you don't comply with minimum safeguards, human rights, labor, labor security, which most European-based enterprises will probably have no problem in fulfilling, but on a global scale that might be a bit more complicated.
Well, maybe turning now to the international perspective. Obviously, the EU doesn't exist in a bubble. It's not responsible for the destiny of everywhere worldwide. What actions being taken by other regulators globally on the ESG level, and how well does that sort of action coordinate on a global level?
Yeah, I mean, we have seen, I think, going back, this is a geopolitical question, of course. I mean, what is green has a lot of impact for your national economy, defining that answer. So we have seen that China has also done their own taxonomy, which has different answers from what the EU has found. And also in the EU, the different countries were not unified on how to define, for example, the energy sector. So I think we will always have this fragmentation. What we as an economy, as an economic sector, need to always be aware of and fight for is that at least in terms of standard, in terms of how do you report the information you have, what kind of information do you need to report, that there's a unification. So I think it makes sense to definitely start with the international standards that are already out there. Like the climate finance task force, I think, has been used widely, and so this is definitely very, very key for corporates and for the private sector to really fight for that point. But I think we also have to be realistic that there will be always different answers depending on what kind of setup you have in your market. And it will be unrealistic to assume that the European Union and the US and China will have the same answer for this question.
Yeah, so then thinking about it from a perspective of international firms or international financial firms in particular, what do you think can be done to address some of that, basically continued fragmentation at an international level for?
Well, I think it's important to be at the forefront of this topic.
Okay.
It's better to not lean back, but to actually take charge, try to comply with what you have to comply with, but also try to see what works for the business. I mean, in the end, we are talking about trying to making your business more sustainable, and don't rely on the regulator to find the right answer for you. I mean, you have to look and find these answers for yourself, and the more convincing and compelling your answer is, the less the regulator will be inclined to mix into that. So I think we have seen in the US a market-led approach, and it has started in Europe with a market-led approach, and is now being a bit taken over by the regulator. So I think we have to continue being market-led in this area. We have to continue to be active, not lean out and do the bare minimum, but lean in and tackle this issue, and then also have a loud voice and opinion on what is it that needs to be done from your sector's specific point of view. Obviously, the more you strengthen the standards that are already out there, the better. But this is a new field. I mean, we are in a new territory here, so there will be different solutions. And I think to make it a bit less pessimistic, I mean, before that, we had different standards of different investors. Everybody had a different answer of what is green. So we're already in a much better place now. So, I mean, everybody wanted a harmonized approach in the European Union, and we have it now. So.
Yeah, so very much a question of leaning in rather than leaning out, and basically making sure that you see the wood for the trees, so to speak, in terms of that your action is really directed on the ESG focus rather than just the bare minimum of compliance with an individual system, really. That's great. Thank you very much for joining us in the studio today and having this short discussion on ESG. It's now time to hand over to Emilie Allaert, who is Head of Operations and Projects at the Luxembourg House of Fintech, where she'll be discussing with her panel regulation again, regulation friend or foe for fintech internationalisation. Thank you very much.
thank you, Chris, for this really nice talk, and I guess we learned quite a lot about it. So now I would like to present you my three wonderful speakers. One of them is actually in South Korea, representing Streami. It's Junhaeng. He's the co-founder and the CEO. It's a blockchain company which grew from merely 2 people to a full-fledged company with earnings over $20 million. He's quite a thought leader in the Korea blockchain industry, and he will give us a little bit of insights on the regulation and fintech scene in South Korea. So welcome and thank you for joining us, June. And then we have here on stage in Luxembourg, Roberto Machado, who is representing CYBAVO. He has quite an extensive let's say experience in Asia, and he joined back Europe a few years ago. So welcome, thank you for joining us. Okay. And then we have Chunhe, Zhang from PingPong Europe, and actually they are both in Luxembourg at the LHoFT, so we are neighbors. Chunhe is the managing director of PingPong Europe since 2018, and you're responsible for financial reporting, payment, and IT operations for the European business development. So thank you also for joining us.
Thank you, Emilie.
So today a big topic about South Korea, Luxembourg, can we build bridges? And we will also discuss the regulatory framework for payments for cryptos, because this is coming. So let's start right now with the current state of the payment and crypto services. In Luxembourg and in South Korea, there is a lot happening. I was last in South Korea in 2018. It was the big boom about blockchain craze there, quite amazing. People are just totally different about blockchain than here in Europe, so it will be quite interesting. And the payment industry, we've seen it has been developing quite a lot, and we hope it is reaching maturity, so we will discuss a little bit more about that. So June, let's start with you, and let's maybe discuss whether there are some exchanges that are currently happening between South Korea and Luxembourg, and if there is a demand to have more of it.
Could you be more specific about what you meant by exchanges?
Yes, sure. Is there a demand? Is there maybe a real will for people in South Korea to perform exchanges or to deal with Europe and Luxembourg especially? Have you heard about this? Have you experienced it?
Oh, yes, most definitely. From a very high level. I think, Luxembourg is very well known for its very vibrant, huge capital markets, whereas Korea, we have such a strong IT talent and technology, and people are so much literate about technology and fintech. And the country is very small, and we have to basically go abroad to survive and grow. And it's the fintech services in Korea and Luxembourg, I think it's a perfect fit.
Okay, yeah, definitely. South Korea, a small country, but Luxembourg, I think, is also in the similar scales, and we also need to exchange with our counterparts and outside of Luxembourg. So definitely similarities here. What are other similarities you could mention about South Korea and Luxembourg? Maybe Robert, you want to, from your experience in Asia, what has been the similarities you've seen with Luxembourg and Europe?
Certainly. So, for example, what I've seen in terms of similarities is that Asian, in terms of South Korea, Taiwan, some other countries, what they have is a strong, I would say, drive from the governments in terms of developing key markets. That's something we have seen when we moved to Luxembourg or before moving to Luxembourg. Essentially, how the government has detected and somehow implemented a plan to develop sectors that they believe are key for the development of the future of the country. I think those are part of the similarities. Also, part of the differences, and this is also very interesting, I think, where bridges can be created, is that, for example, Asian countries, China, South Korea, Taiwan, Japan, these countries have been spurring innovation. They have been driven by innovation first, and then regulators have been coming after, right, following that innovation to try to bring protection to the investors in case of crypto fintech, for example, right? So here in Luxembourg, the impression we have is that innovation takes is also a very important driver, but nothing happens unless there is regulatory clarity, right? And that's, I would say, a whole difference that I've seen between the different regions.
Okay, and what is then the potential? And the question is for all three of you. What is the potential of building these bridges? What would it bring to Luxembourg to build bridges with South Korea or from Asia, for example, to Luxembourg and to Europe? So maybe Chunhe?
Oh, yeah, sure. So I would like to introduce something from my own knowledge and also our company's observation on the customer behaviors. So our company, well, maybe it's a new name to the audience. Our company, PingPong, is providing the local and global financial services to the e-commerce related companies. So we, with our offices and also the partner service network, we can provide services in over 40 countries. Luckily, we have offices in both Luxembourg and Seoul. So we see from our observation, well, during the past year, because we started our services for Korean clients from the year of 2020, we see that many Korean companies are investing in Luxembourg or in other European Union countries to support their e-commerce business. Well, as we know, Europe is the third biggest e-commerce market in the world, and also South Korea is the sixth biggest. So we see enormous potential between the two markets for them to trade, for them to connect with the consumers, producers, sellers in each market. So from this point, I see from the customer behavior, we see huge potential between Luxembourg and Korea for them to expand their e-commerce sales.
Excellent. And Jun, what is your point of view on what could be the potential for South Korea to join Luxembourg or to Luxembourg to join some exchanges and perform business in South Korea?
I think the biggest assets that we can bring to Luxembourg, South Korea, is that we have very extremely motivated people and extremely motivated people that are willing to work 24/7, maybe not 24/7, but maybe like 100 hours a week to actually create value and try out new things. And also we have a retail base that are just well ahead of the adoption curve, meaning that people are just daring to start out and try out new things, like early adopters. It's just everywhere, and that is something that we can definitely bring to Luxembourg, where I believe the sort of the biggest market sentiment is very safe and conservative. And at the same time, I think what we can get from Luxembourg is its sophistication and scale of the financial market, like capital market and financial services.
Excellent. And Robert, you have, I think, the experience of both worlds. Do you concur with that?
From our perspective, CYBAVO is a company who was originated in Taipei and Singapore. And actually, we moved last year to Luxembourg to open our operations here in Europe. Based on our experience and the reason to choose Luxembourg as our center in Europe operation, this is essentially because Luxembourg has become kind of a very good test ground for the rest of the European market. Right? It's a small country, it's a highly educated working population, for example, highly educated workers, right? A lot of education, high university degrees, and so on. Culturally, it's a country that is speaking French. Of course, Luxembourg is in German, which is actually very helpful if you are planning to somehow progress to other markets in the Benelux area, in the DACH region, for example, is geographically very centrical to Europe. So it's very easy to move around from travel or even if you plan to expand to some of other these regions, right? Then in terms of the ecosystem, the innovation ecosystem, I think Luxembourg is one of the key players in Europe, and this is speaking from my personal experience. When we came here, before moving to Luxembourg, we had experience reaching out to Luxembourg House of Financial Technology, Luxembourg for Finance, for example. We had a great accessibility to the regulator also to get visibility on what was the full transparency, what was the existing regulation, how we could work and contribute to that. So I think it's an excellent point to somehow, if some Asian companies are planning to expand to Europe, I would say Luxembourg is an excellent first step to have a kind of a soft landing into the region.
Excellent. So if you want to do business, then you know you can come to Luxembourg. You'll be more than welcome here. Let's discuss, let's say, a hot topic. It has been quite heavy on the news for the last few years, but COVID, it definitely had an impact on the business. And I would like to know the evolution of payments industry and potentially digital assets for those of you working in this field. What has been the impact of COVID on your respective business? Is there a boom? Was there a slowdown? So Chunhe, could you please maybe give us some insights on the impact of COVID on your business?
Yeah, Andy, with pleasure. So for this topic, I think the e-commerce related companies had a comparably easier situation than the others. So from the year of 2020, during the pandemic of COVID, everyone sees the world economy had been impacted severely. And also we observed that the consumer behaviors also changed. So this change boosted the purchase on the e-commerce platform in the past 2 years, or mainly in 2020 and the first half of 2021. So we saw the sellers' attitude was also changing together with the market. So from pessimistic at the very beginning, then gradually optimistic until the top and gradually back to normal. So also we saw that the pandemic made all the participants in the e-commerce markets to have more opportunity to work closely. The marketplaces, the shipping companies, tax advisors, and also, of course, the payment service providers like PingPong. So from our own business figures, we saw an increase on the business volume from the beginning of the pandemic by over 100%. So that's not bad. Even by now, when most of the countries are coming back to the post-pandemic period, we are still expecting more opportunities in the coming years.
Excellent. And Jun, what has been the evolution in South Korea? Are you back to normal now? Are you above the level before COVID?
I think we're completely back to normal, but I guess compared to US, where people don't really wear masks, except for wearing masks outside, I think everything's really back to normal. We have regular working hours, and most of the restriction has been lifted. And you asked me about how it impacted our industry and our business. It definitely has expedited the adoption for people's mass adoption of digital assets and fintech services for sure.
And finally, Robert, what is your experience with your business?
Certainly, I totally align with John, what he mentioned. I think one of the key drivers of somehow one of the positive sides of COVID, if there is any, is the adoption of digital currencies. We have seen since 2020 a large boom in terms of adoption, and part of that was based on the reduced mobility that population had on the different regions, right? In case of CYBAVO, in case of our company, we are a 2018 startup. So half of our life has been under the COVID. So we had to learn very fast how to adapt to this, I would say, reality, right? So that drove us to adopt a very, I would say, flexible working model. to work, I would say, in a hybrid, remote, physical environment, but also in terms of business development, we were able to somehow work natively in a remote manner, right? So most of our customers that are outside of I would say Taiwan, where we have a big customer base, all of them have been I would say acquired remotely. There was no business travel, there was no event, so essentially we had to do all of this remotely. And so we learned to do it, and we have succeeded on doing so. So it's been, I would say, a positive experience. It's now good to see that things are going back, I would say, to what it was before. But we learned a lot from that experience, and now we are kind of structuring our daily operations even now, taking into account the learnings from this period.
Okay, so you've built cyber bridges already, and you're trying to maintain them. That's good. In terms of regulation, there was a huge boom in regulation before COVID. We know there were a lot of discussions. It's something that is with us since 2008. We cannot live without the regulation. You mentioned earlier on that in Europe we tend to have a different approach from Asia. In terms of bringing the regulation before implementing innovation. Was there any change in your business with COVID? Because we know there were some delay in the application of regulation, or have you seen some improvement? Roberto.
Fantastic. Yes, so I think it was not so much due to COVID in terms of regulation, but in the case of the digital currencies, we have seen a very fast evolution from, of course, it's a 13 years old technology, I would say, but the last, I would say, boost or the huge increase has happened in the last 5 years, right? So what we have seen is certainly when we created the company, it was 2018, that was, it's called like the Far West, right? Everyone was calling this the Far West. It's the time of the ICOs, the initial coin offering, those unregulated times that many investors, there were, of course, a lot of innovation, a lot of very serious projects, but there were also very sketchy players in the industry, right? So who actually brought some repercussion into the industry and some bad reputation into the industry, right? So it was certainly due to those, I would say, to those bad actors that regulators came in and started to somehow bring clarity and what should be the protection that they should bring both regulators, players, technological providers to the investors, right, and to the I would say to the users and customers of this technology and digital assets. So certainly we've seen a long way since the early days of 2018. And now, of course, there was implementation, clear visibility on AML risk of the transactions. FATF travel rule was implemented also to get visibility on the somehow on who is making the transactions and so on. And the vision that we have is that this regulation is actually helping to spur and to increase the mass adoption, right? If there is this protection for investors that is brought not by the innovations, but in cooperation with the innovators, but also with the regulators, this mass adoption will not happen, right? So it's been a long way, but 4 years after, I think a lot has been done.
Okay, and before going to South Korea for their point of view on regulation in the fintech world, Chunhe, what is the situation in the payment industry, really specifically? We know there were already quite a lot of regulations happening. It's nearly at maturity, I would say, for payments even before COVID. What is, at the moment, the regulation status, and do you believe we need more in the payment industry?
You mean the regulation on the payment industry in Luxembourg?
Yeah.
Or maybe also.
Well,
yeah,
in Asia as well. You have both views, so it's interesting to hear.
Yeah, I'm more familiar with the local regulators, the CSSF in Luxembourg. So from my knowledge, when the more company had employees working remotely during the pandemic, the regulator, they made some change. They are focusing more on the information security and also the business continuity. So during the pandemic, we did receive very helpful guidance and support from the CSSF for this perspective. And well, it did help us for smooth business operation. So I would like also to express my gratitude to the regulator. Excellent.
And Jun, how was the regulation evolving in South Korea for the digital assets or for fintech and payments in particular?
Well, what's really interesting is like digital assets and fintech regulations are just very different. It really panned out differently. So as per fintech, the government's move to regulate, the government's move to regulate started from 2015, 2016. And everything worked really in favor of the fintech industry as a whole. Whereas crypto or digital assets, things have been quite different. So the government didn't really like crypto initially, especially with all these ICOs and scams that are so rampant back in 2017, 2018 during the ICO boom. But then triggered by the FedF guidelines, the government is starting to really perceive crypto industry as an industry and then try to like regulate in order to protect consumers and the small guys in the market, the retails. And I think a lot of things have put into, it's more organized now. And I think we really need more regulation, not just in order to protect retails, but also in order for the institutions to really come in and participate in trading and running and managing, investing the digital assets.
Thank you for this quite insightful discussion on this evolution of the regulations. My question now would be to Chunhe. Do you believe the payment industry has reached maturity? And then I will ask Robert whether you believe that digital assets will reach this same maturity, and do you think that there is a future? So for both of you to come up with a nice answer to this difficult question.
First, for the status quo and
Okay. So I would like to analyze this point from the nature of the payment. So to me, payment is a direct indicator of people's economic activities. So when people work or when people trade, they need payment. So from my point of view, the payment industry is still far from maturity when we still see the good growth potential on the world economy. So, you see, after the pandemic, the world economy is just coming better. So we will see some good opportunity in the future for the payment companies. Well, the new change is that the market is asking for more innovative payment method or also the better payment experiences. So that's my idea.
And maybe you will join the digital assets world as well and include it in the payment directly.
We have a discussion after the panel. So from our perspective, we agree, right? And in terms of the payment industry, of course, is much more mature than the digital asset currently. And we believe that for the digital asset industry to reach a similar degree of maturity, it's something that all of the players, we are working very hard to go there. Somehow our goal is to take the current paradigm of the payment industry, right? And take, for example, the ubiquity, the robustness, the protection and security that, for example, clearing banks are bringing to that ecosystem. Take all of those advantages, bring them to the digital asset somehow, but then also solve part of some inefficiencies that this industry has somehow been carrying over the years, right? So, for example, this complex structure with a lot of intermediaries, which in the end are taking up I would say some commissions are bringing some additional expenses into some of the players. For example, we think that digital money can help solving in certain specific cases part of those, I would say, inefficiencies, right? Digital money, which is somehow native to the internet, can bring certain similarities to how we are now dealing with data, right? So chip transfer, fast speed, programmability, that's something that digital money can contribute to the existing payment infrastructure. Doesn't need to be incompatible. It can be kind of complementary, right? As we were saying, digital payment industry can work together with digital assets to bring new type of payments, of currencies into that existing ecosystem. But to do that, digital assets also need to bring certain clarities and mitigate certain risks that have been inherent to our industry, right? So for example, being digital asset, the most obvious one is cybersecurity risk. That's something that everyone you speak about cryptocurrencies, you will say, well, but what happened with hacks, right? So mitigating the cybersecurity risk, mitigating the operational risk. Now you have companies, IT departments in the companies who are taking care of the digital assets. What happens if the IT management person or team, they become malicious, right? That's something that is not happening with the traditional industry. So this risk needs to be mitigated. The regulatory risk, we see that regulators are evolving, the regulation is evolving, and what might be valid today might not be valid tomorrow, right? So that's something that the players in the digital asset industry, we need to somehow help mitigating. And finally, of course, the accountability, accounting and taxation risk. That's something that companies, that if they want to start operating with digital assets, they need to have clarity on, okay, how we're going to be taxing this, how this is going to be going into our books, right? We think, for example, there are different types of digital currencies, and the one who might be closer to this degree of maturity might be, for example, stable coins or central bank digital currencies, right?
And speaking of regulations, I will give the voice to Chunhe and June here specifically. First, I will ask June really to be specific about the regulation in South Korea, whether you are more about the innovation, promoting it, or do you believe that the regulation is currently hindering the innovation that you are trying to encourage in South Korea? And then we will discuss with Chunhe about a specificity of Europe and the passporting. But first, let's go to June to give us a little bit more of insight on the regulation side of South Korea.
I guess the current state, I believe it is really the bare minimum of the regulation. I mean, some people, of course, like not everyone is content about the current regulation as is, but overall, I think it's just about right, because it doesn't really. I don't think it's fair to say it's really stifling the innovation of the industry, because by licensing, by introducing the licensing regime for crypto exchanges and virtual asset services providers, I think regulation just really reflects where the society is at large, not just the industry, but also the people and the consumers involved in it. So if they do act like cowboys, I mean, there's got to be regulation. Like you don't want powerful people or the business people to fleece out the retails, and that's just unacceptable. And the current regulation, I think, is like the bare minimum to stop those kind of predatory behaviors. It's just needed. I guess like if our industry is behaving in a very responsible manner, the government will trust us, and they will lift some of the regulations, some of the restrictions, so that there is more room for innovation. If not, there will be more regulation, and it'll end up stifling innovations, which would lower the competitiveness of the country's industry. So I guess it is something that we can't really single-handedly say, okay, this is bad or this is good, but this is just where we are.
Thanks for this, and a few words on the passporting, and we'll see how it's working in Europe and how it's benefiting your business.
Yeah. Let me continue. So until now, we are always convinced that we made a correct and good decision to start our business in Europe from Luxembourg as a regulated payment company. So here, the local regulator, the CSSF, I'm saying it, has expertise the team to guide, to monitor, to support the regulated companies. The country is not big. So by territory and by population, I agree that the passporting is an effective way for the international companies to reach out to the whole EU area by passporting to expand their business, to cover bigger market. But moreover, I'm more convinced that we are benefiting from the local financial ecosystem in Luxembourg and also the good reputation of Luxembourg Financial Center. So to me, that's a very key. So.
Yeah, thanks. Thanks for the discussion. Unfortunately, it's already the end. I really enjoyed it, and I think we could have continued for 1 hour full. Thank you very much for your insights about the business in Luxembourg and in Asia. I hope it will give the will to other business to join the troops and build bridges between the various countries. So thank you, Jun, for joining us from South Korea. Thank you, Robert. Yes. Thank you, Chunhe. And
thank you.
Let's keep up the good work in all the world then. Thank you very much.
Well, thank you very much, Emilie, and your panelists for that very interesting discussion on challenges and opportunities in the e-commerce and cryptocurrency spaces, which I think are two really interesting fields from a regulatory perspective at the moment. That concludes our event today. So I would like to first say a couple of words of thanks before letting you all go. Thank you firstly to all of the speakers who participated today and without whom we couldn't have made this event the success it was. And thank you also to our sponsors for their support for this event. We very much look forward to seeing you back on the other side of the summer in September for our next season of events, which will be kicking off in September with a focus on international payments. So until then, bye-bye.